Hey guys, welcome to Lunar Beaches Crypto. In this episode, we are going to go over what I believe we could be seeing in the not so distant future. This is just a theory, it is not financial advice, but I would love to hear from you guys in the comments down below. So please let me know what you think after you've watched the whole video all the way through. And then, just make sure to hit that like button, subscribe to the channel if you're new, and hit that notification bell to be notified for whenever I drop new content and when I go live. So, let's go ahead and dive right on into it. As you can see, I want to talk about FedNow. So, for those that don't know, FedNow is a new instant payment system developed by the Federal Reserve in the United States. It is designed to provide faster and more efficient payment options for consumers and businesses, allowing them to send and receive payments instantly, 24 hours a day, 7 days a week, 365 days a year. So, just like crypto, it's going to be free flowing. And the FedNow service is intended to address some of the limitations of existing payment systems, which may take days to complete a transaction and to provide a modern and innovative alternative to traditional payment methods, such as like checks and wire transfers, stuff like that. The system is expected to be available July of this year. It's going to be launching in July of 2023. And with the FedNow service, individuals and businesses will be able to make instant payments directly from their bank accounts without the need for intermediaries or third-party payment providers. This is key. This is big, okay? Because this will help to streamline payment processes and improve the overall efficiency of the U.S. payment system. So, what does that mean? That means that it's going to unlock liquidity. It's going to unlock capital. It's going to make money cheap. Why would it make money cheap? Well, because you're unlocking capital. Capital flow is going to be kind of insane. Because up until now, businesses, banks, they're only doing transactions during business hours, 5 days a week. That's it. You know this. You know this. At the end of the day, banks close. That's it. You go to the bank, you put cash in the ATM, you're not seeing that money until the next day. Even though it's cash money, you're not seeing it until the next day. They've got to actually make sure that the money is there. FedNow service, they already know it's there. It's digital payments. It's crypto. It's not crypto, but it's what crypto has been aiming for. So this is actually a direct response to crypto, to the crypto markets. But this is why the Fed has no problem with crypto, because they're like, hey, we got FedNow coming. What do we have to worry about crypto for? Crypto will be put off and be the community-driven currencies, if you will, of the internet. So that's basically what I think it is. And then maybe you have some banks, because FedNow will be interoperable, so you can have interoperability between blockchains and FedNow, and banks can decide to use blockchains and interoperate with FedNow. The dollar's not going anywhere, folks. I've been trying to tell you this. It may lose its value initially. It definitely will lose its value initially. Because what's going to happen, and I'll show you when I get into the charts, is we're going to see a melt up. I believe. I was having a conversation on Facebook with a friend about the Fed and the government, blah blah blah, and I gotta tell you, I came to this. I was in the middle of typing a comment back to him, and I was talking about FedNow, and it just clicked in my head, and I was just like, wait a minute. If this is going to unlock so much capital, liquidity is going to be basically on hand almost. Not entirely. FedNow will still have its limits, but it's going to open up a lot of capital, and assets are cheap, especially in the technology sector. Crypto is cheap. Blockchain technology is cheap, considering it's going to be used. You don't know which ones? I have a feeling Bitcoin's going to be one. I'm questioning Ethereum at this moment. But Ethereum could still. The problem with so when it comes to crypto, it's really difficult to see the future when you have a service like FedNow. I'm just being honest. It's difficult to see the future of crypto. Now, I believe in crypto, and I believe a lot of people believe in crypto, but it is still a speculative asset, and the cryptos that will see the most benefit, I believe, in my opinion, not financial advice, will be centralized crypto companies working with banks and other companies, but they'll be using decentralized public ledgers. Someone like a Ripple using the XRPL, which uses XRP as its native token. You can even tokenize certain things. So maybe even stocks eventually become tokenized. What company is going to tokenize stocks? Is it going to be Ripple? Or is it going to be someone else? I don't know. I don't have the answers to that. It's all right now a big gamble. I do believe that after we see that initial melt up, we are going to get a massive crash. Massive crash. But if you're in it right now, you have a chance. You have a chance at making life-changing money. Let's go ahead and get into the charts. Let's start with the Dixie. So I have marked off. I have the Dixie, the Dow Jones, and and Bitcoin. Now, in all three, I have marked off July of 2023, which is the start of FedNow. Now, initially, on the release of FedNow, possibly even come up to here because we do have a vector candle here. But we could see this track up, either leading up to it and then come crash, or This could just meander along here. Big pop on FedNow whenever it gets released, because dollars will be, even though they'll be released, dollars will be in high demand immediately. But then those dollars will then flow into assets, and then we start to see the major crash for the dollar. Now, we zoom out. I mean, is it really that major of a crash? We're coming down. This is where I would expect us, because this is almost like a fake out to the upside, fake support, retrace, pull down to where the liquidity lies, and then maybe come back and range around. Who knows? I don't know the future of the Dixie, but this could be what we're looking at, moving, at least in the recent, not so distant future. There we go. That's the word I was looking for. So that's kind of what I'm looking at for the Dixie. Let's go ahead and go to the Dow Jones. Let's back up a little bit, see where we're at here. So what we've already done with the Dow Jones is we've already had a breakout, and we've already come back and back tested it, and it has found support on top of that. Now this orange line here on this chart and on the, I don't have it on this chart. Okay, this orange line here is a 200 EMA, and we are on the weekly chart, so this is 200 weekly EMA. So it has acted as a dynamic support, except for, the COVID crash. But then we had that big bull run. But how big of a bull run is it really when you just had that big of a crash? I mean, from bottom to top, yeah, that's a big bull run, but we only went from here to here. Really. See the breakout, pull back, breakout, breakout, pull back, FedNow release. Maybe it does a double tap and launches, or maybe it just sits still and then goes. But once the capital starts flowing, I see no reason why the Dow Jones would, why would it be bearish? Why is it bearish? What do we have to come back and test? I want to see it. Let's see, we do have a tiny volume gap here. Is that really going to bring us down? I don't know. We don't have to fill every single gap. There's another tiny volume gap here. Oh, we have already come back and tapped that. So what's next? Pretty strong support right there, by the way. Painting the picture. Is the picture being painted for you? Let's see. Bitcoin. 200-week EMA. Bitcoin definitely reacts to this one. Now you see it's a double. We got double. I have a 200 EMA and a 200 moving average, simple moving average, on here. So that's what that is. Get the pop up above, come down, back test, dynamic support. If you follow me on Twitter, you know I've been wanting that 25K, but that might have been enough. I mean, we're already above 27K at the moment, so after dipping into the 25s, which I figured we would, but anyway, if this thing keeps going just the way that it is, let's just do a bars pattern real quick, because these two periods of time look very similar to each other. Let's go ahead and clone. I mean, what is this? Does this remind you of anything when I do this? Does this remind you of anything? Let me do it again. Now, I happen to believe it'll get going here. Probably more in here. But does that remind you of anything? Anything? Let's go back to 2017, 2016, 2017. Just constant, just impulse, accumulation, impulse, accumulation, impulse, accumulation, impulse, well, distribution and accumulation because it's getting bought up. But impulse, big drop. Impulse, big drop. I mean, it happened that entire bull run. Come up to here, one giant impulse basically. You have one pullback during the 2020 bull run. It looked nothing like this. This is a healthy bull market right here. Now, if I go back to the Dow Jones, put this on the 3-day, I mean, it does the same thing. Push up, pull down, push up, pull down, push up, pull down, push up. Then it starts to, falter a little bit. But go back to previous bull runs. This is how bull runs function. Especially when you got those impulse waves. You push up hard and then pull back hard. Push up hard, pull back hard. I mean, that's how a bull run goes. But the pullbacks are relatively small compared to the rest of the move, Once you get a pullback like this, that brings you back to other levels, but edit. forget that part. I don't know where I was going with that. But yeah, pullback, boom, 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 boom. So, is that what we're seeing? Are we going to see a new all-time high in 2023? Or do you think that it's still just going to kind of meander along? Or do you think it's just going to meander along? Let me get rid of this. This is very annoying. I hope I can edit this out. Anyway, we're just going to meander along, maybe come up here, hit some resistance off of this, and then just kind of meander along. And then after the halving, sometime late next year, we go and we take off. If that's what you think, good luck. Well, actually, you know what? If that's what you think, you're probably hodling. So you're probably not going to sell until Bitcoin creates a new all-time high anyway. And it doesn't matter when that takes place. So you have a plan in place. You should have a plan in place, I should say. You should have if you have hodl bags, if you're not a day trader, have a plan for when you plan on selling. Have price targets for when you plan on selling. Bitcoin new all-time high might be one of those times it's time to sell. Well, it depends on what you have your money involved in. Sometimes alts lag and they don't go with Bitcoin. Bitcoin will go up and then crash. And then in Bitcoin's retrace, that's when alts will take off. Sometimes that happens with a lot of alts, but that's not the case every time. Sometimes some alts are ahead of Bitcoin and just going absolutely insane. Some of them are going insane going into Bitcoin's fall. So it's just all about having your targets preset so that you can just go ahead and get out at those price targets. And that's going to be the lesson for today, is just no matter what you do, have your targets. That's not the lesson today. The lesson for today is risk management. People, let's have a conversation. Manage your money. Manage your personal finances properly, like a business. Okay? Nobody's going to do it for you unless you pay them to. But most people, they're not going to do it for you. Nobody's going to do it for you. You got to do it yourself. You got a budget. If you got a low budget, learn how to coupon. Learn how to buy in bulk. Learn how to take your lunch to work. Stop eating out. Start cooking at home. The little things add up. Those lunches that you're buying every day, those fast food lunches that you're buying every day while you're at work, that adds up. $50 a week, probably. Maybe, at least. That's $50 that you could have thrown into Bitcoin or Ethereum or XRP or, dare I say, Pepe. Definitely not an investment decision right there. I would not invest in Pepe. I have traded it. I doubled my account this week trading Pepe on 3 and 5x. Not even crazy leverage. Oh man, it's been fun. Anyway, yeah, this video has been fun, guys. If you enjoyed it, hit that like and subscribe to the channel if you are new. Leave a comment down below telling me if you think it's crazy. Tell me if I'm crazy for thinking that we'll see a new all-time high in 2023. I think FedNow is the key to making that happen. But I don't know. Nobody knows. But maybe you know. So just tell me in the comment section down below. I love you guys. Thank you for watching. I'll see you all in the next video. Peace.